Welcome to your favorite learning platform, the E for Education YouTube channel. Today we're delving into a fascinating subject that serves as the backbone of our global economy: international money and banking institutions. These institutions play a pivotal role in maintaining financial stability and fostering economic growth worldwide. They're the unsung heroes ensuring smooth financial transactions across borders, providing financial support to countries in need and setting economic policies that affect us all. In this video, we'll be exploring what international money and international banking institutions are, their purposes, and their roles in the global economy. We'll also be shedding light on the key international banking institutions that exist today, understanding their scope and how they assist various countries, including a focused look at Pakistan. So, buckle up as we navigate through the world of international money and banking institutions. Before we dive into the institutions, let's first understand what we mean by international money. In the simplest terms, international money is the currency of various countries that is used for global trade and transactions. It's the backbone of our global economy, enabling countries to buy and sell goods and services across borders. Now, you might be wondering, how is this possible? How can one country's money be used in another? This is where currency exchange comes into play. Currency exchange is the process of converting one country's currency into another's. This exchange rate fluctuates based on various factors, including economic stability, inflation, and interest rates. For instance, if you were to travel from the United States to the United Kingdom, you would need to exchange your dollars for pounds. The rate at which you can do this changes almost daily, influenced by the economic conditions of both countries. International money plays a crucial role in global trade. It provides a common platform for countries to trade and invest, fostering economic growth and stability. It enables countries to buy goods and services from other countries, even if they don't have the same currency. Moreover, it's not just about physical money changing hands. With the advent of digitalization, international money transfers have become faster and more efficient. Through electronic systems, money can be transferred instantly across borders, facilitating global trade and investment. But this complex system doesn't operate on its own. It's governed by various rules and regulations to ensure fair trade and economic stability. These rules are set by international banking institutions, which we'll delve into in the next segment. So, to sum up, international money is the currency used in global trade, exchanged at rates determined by various economic factors. It's the lubricant that keeps the wheels of the global economy turning, enabling countries to engage in trade and investment, thereby fostering economic growth and prosperity. Now that we have a basic understanding of international money, let's move on to the banking institutions that govern these transactions. There are several financial institutions that regulate and aid the flow of money across the globe. Let's get to know some of them, shall we? First up, we have the International Monetary Fund, or IMF. This institution, with 190 member countries, was established to promote worldwide monetary cooperation and financial stability. Essentially, the IMF acts as a financial advisor and bailout fund for its member countries. It provides financial assistance to countries experiencing balance of payment problems, helping stabilize economies and prevent or mitigate financial crises. Next on the list is the World Bank. Now, don't let the name fool you. The World Bank isn't a traditional bank where you can open a savings account or get a credit card. Instead, it's a group of 5 international organizations, and their goal is to reduce poverty and support development by providing loans and grants to low and middle-income countries for capital programs. So, in essence, the World Bank is like a big global charity, but one that expects its money back, albeit with very low or no interest. Finally, we have the Bank for International Settlements, or BIS. This is often called the Central Bank for central banks. Founded in 1930, it's the world's oldest international financial organization. The BIS serves as a bank for central banks, meaning it doesn't lend money to individuals or corporations. Instead, it's a place where central banks can deposit or borrow money, collaborate on financial and monetary matters, and act collectively if needed. These 3 institutions, the IMF, the World Bank, and the BIS, each play distinct yet interconnected roles in the global financial system. The IMF helps maintain stability and prevent crises, the World Bank aids development and fights poverty, and the BIS promotes monetary and financial stability around the world. It's worth noting that these aren't the only international banking institutions out there. There are others like the European Central Bank, the Asian Development Bank, and the African Development Bank, each playing a vital role in their respective regions. However, the IMF, the World Bank, and the BIS are considered the big players on the global stage. In a world where economies are more interconnected than ever, these institutions are indispensable. They help ensure that money flows smoothly around the globe, that economies don't collapse under the weight of debt, and that countries have the resources they need to develop and grow. These institutions play a crucial role in maintaining global financial stability. Let's dig a bit deeper into how they do this. Each of these institutions has a specific role and scope that helps in the smooth functioning of the global economy. Let's delve into the roles and scopes of some of the key international banking institutions. The International Monetary Fund, or IMF, is a global organization that offers financial assistance and advice to member countries. Its scope extends to overseeing the international monetary system, ensuring its stability, and providing a forum for dialogue on international economic issues. For instance, the IMF has been instrumental in assisting Pakistan in maintaining economic stability by providing financial aid and policy advice during challenging economic periods. The World Bank, another global institution, aims to reduce poverty and support sustainable economic development. It provides loans and grants to low and middle-income countries for capital programs. Take, for example, the World Bank's role in Pakistan's education sector. It has provided significant funding and expertise to improve education standards and access across the country. Then we have the Bank for International Settlements, or BIS, which serves as a bank for central banks. Its primary purpose is to promote monetary and financial stability around the world. It does this by acting as a hub for central banks to exchange information and collaborate on financial and monetary matters. Lastly, the Asian Development Bank, or ADB, focuses on fostering economic growth and cooperation in the Asia-Pacific region. Its role in Pakistan has been pivotal, with investments in various sectors like energy, transport, agriculture, and natural resources contributing to the country's development. These institutions, each with their unique roles and scopes, are crucial in assisting countries in their economic journey. They provide financial resources, policy advice, and technical assistance, supporting countries in achieving their development goals. In the case of Pakistan, these institutions have played significant roles in various sectors, from education to infrastructure development, ensuring not just economic stability but also growth and progress. These institutions, through their various functions, ensure that the international monetary system operates efficiently. We've covered quite a bit today, haven't we? We embarked on a journey through the intricate world of international money and banking institutions. And it's been quite the learning experience. Let's take a moment to recap the key elements we've explored. We started by demystifying the concept of international money. We understood that it's not just about different currencies, but also about the systems and structures that allow money to flow seamlessly across borders. We learned that these systems, like the foreign exchange market, play a pivotal role in international trade and economy. Then, we dove into the vast ocean of international banking institutions. We discovered that these institutions, including the International Monetary Fund, the World Bank, and the Bank for International Settlements, are the pillars that sustain the global financial framework. They serve as the architects of international financial stability, designing policies and providing financial assistance to ensure smooth economic operations worldwide. We also discussed their roles and scopes in detail. We saw how these institutions assist countries like Pakistan in times of economic turmoil. They provide financial aid, policy advice, and technical assistance, helping nations to stabilize their economies and foster growth. But the key takeaway from our discussion today is the vital role these institutions play in maintaining global economic stability. In our increasingly interconnected world, the importance of international money and banking institutions cannot be overstated. They weave together the world's economies, enabling them to function as one coherent, stable system. And with that, we come to the end of our journey through the world of international money and banking institutions. We hope you found this journey enlightening and that it sparked your curiosity to learn more. Don't forget to like this video, subscribe to our channel and share our content with your friends. Stay curious and keep learning with E for Education.